when you're talking about what's the magical level where the stock market falls apart.
If we bring Russia back in and Russia ramps production, are we going to count that increased Russian production as part of Ukraine deal, as part of our 3 million barrels a day? Maybe.
I think there's a 15 to 30% drop coming in the equity markets. And I look at Trump's term like a 2-year term, not like a 4-year term.
We should be taxing foreign nations to enrich our citizens.
This is the thesis for my 2-year longs in gold, silver, copper, shit that Dennis Gartman used to say hurts when you drop it on your foot.
China's going to take $12 trillion of their ball that is currently sitting between initial capital and gains in the NASDAQ at all-time high valuations.
People say that what he's doing is illegal, and some of it might be. I know the USAID stuff is not illegal.
I don't know that stuff well enough other than to know, like,
Welcome to the Futures Edge. I'm Jim Iuorio. That's Bob Iaccino. Today we have Chris Markowski, president of Markowski Investments and a longtime contributor on his own radio show. Seen him on Fox Business quite a few times. Chris, so glad you're here. Where are you coming to us from?
I'm actually down in sunny Tampa, Florida right now, so I'm happy.
Wow. All four of us are in Florida, the producer and the three of us on air. Bobby's, I'm just visiting for a few weeks in Marathon, but Haley lives in Miami and Bobby lives in Naples. Wow. Where are you from originally?
I'm originally from upstate New York, but spent a lot of time in Long Island as well, living there. And I'm just thrilled. The ultimate Florida man, Ron DeSantis, making this place even more attractive. Now he wants to get rid of property taxes. And I mean, again, I give him sainthood for crying out loud if he ends up pulling that off.
Okay, I was listening to him talk about it today, by the way, because I'm in Florida and it was on the radio. And I still think his voice, which he's a fine speaker, but his voice is kind of a little high pitched. Is that going to be the thing that keeps him from being president? Because weird little things keep people from being president. I'm not even joking.
You're not wrong with that. I mean, that's the world that we live in today's day and age. You got to be right for TV. I mean, not even today's day and age. Didn't Nixon lose to Kennedy because he was sweating too much during the debate the first time around? That caused a problem.
Two elections have been decided by makeup. Nixon wouldn't wear makeup, and he was destroyed by Kennedy because he looked like a sweating asshole. And then Al Gore had his makeup on badly, and in that debate, he looked terrible too. Makeup's played a big role in our nation's history, in my humble opinion.
I would argue that Biden's makeup made him look alive.
So yeah, so Nixon lost in 62 and then won in 70? Does that sound right?
Yeah, that does.
Yes.
Because Watergate was what, 73 or 77?
Nice. Yeah, Watergate was 74. He got pardoned in 74. Remember, it was June. My dad made me watch it because we weren't very political, but he's like, the president is resigning, so you better get in front of the TV and watch it. I remember I was 9 years old. So anyway, Chris, so today the stock market is taking a few punches this week. Mm-hmm. You watch this stuff like we do. Bobby and I both kind of were a little bit ahead of this. It seemed stretched to us. I didn't like some of the leadership. I didn't like the transition. I think we're transitioning from bad to good, but that doesn't mean the transition can't be rocky along the way. What do you think are the movements for the current level of weakness?
Yeah, I think that there's going to be some more reality based on some of the government numbers, which I just haven't believed in for a very long period of time.
How dare you say the government's lying about that?
The GDP numbers have been inflated because of government spending. And if obviously that goes away, that's going to take a hit. So for all intents and purposes, I think we probably were in and out of a recession for some period of time in many different areas. You're taking a look at consumer credit card debt that's at records, people having a difficult time affording homes. So I don't think the underlying narrative that they were pushing a while ago that everything was just hunky-dory and fantastic was ridiculous, and that actually helped Trump win. So to me, this was all well and good. I mean, I think that the markets need to do this. And like yourself, the leadership that we've had for a period of time, it did well, but I'm a big believer in taking profits on the way up and trimming positions. I think that's always the smart move, especially some of the moves that you've seen. They've been just absolutely ridiculous, parabolic, great companies, but oh my God, was 8% of my portfolio. Now it's 15. You got to cut that down a little bit.
Chris, you mentioned credit card delinquencies. And one of the things I've looked at based on those charts, and for everybody, you can get that at the St. Louis Fed, it's pretty easy to find, is they're definitely at new highs and they continue to almost parabolically go up. But when you look at them versus history, like if you go back 20, 30 years, they're not that elevated. Now, my question is this. Is that another one of those things where like the four of us are old enough to remember getting a home mortgage I remember the first home I ever bought, my mortgage was like 6 5/8 and I was ecstatic. Is this another thing where people are just going to be, because we're dominated by a particular generation or two that haven't lived through what we've lived through, where this is actually going to matter because it's gone up so parabolic?
Overall, I mean, as far as mortgage rates are concerned, like I think my first house, it was probably around 7.5. The one thing that's different this housing market than in prior ones is that we just haven't had the inventory available. We haven't had that inverse relationship take place when interest rates go up and the housing prices have come down. They still remain elevated around the country for a myriad of reasons, some of which we just mentioned, in regards to certain areas with property taxes, and certain areas have gone up so much that people got golden handcuffs. They don't even, if they wanted to move, it's going to end up costing them more money because they're going to pay a different property tax rate, which is problematic. And again, that has to be dealt with as far as the government is concerned. But I'm with you. People thinking that, mortgage rates are high. I'm like, no, they're not really. I think that the Fed has fumbled and bumbled this way. I don't understand why they even have these Fed representatives on CNBC and Fox Business anymore. It's like ridiculous. It's like picking the worst Jets head coach and having them come on and tell you how to play football. They're wrong all the time. I mean, we were just lowered, rates by 100 basis points, and 10-year went 100 basis points in the opposite direction. It's never happened before. Inflation is transitory. We got to do this. It's a mess right now, as far as I'm concerned, when it comes to the overall idea. That rate period that we had where you can get a mortgage at 2.5%, 3%. I don't think we're going to be seeing that anytime soon.
Before we get Jimmy started on the stupidity of the Federal Reserve, from a perspective of the rates, right? I was on Yahoo Finance the other day, did an interview with a guy named Brad Smith, who I happen to know and I like, but he's very young. And he mentioned to me prior to us going on air, he's like, yeah, these mortgage rates, how can anybody afford a house where these mortgage rates are? And then I chuckled and we went live. So I ended up with a big smile on my face at the start of the interview. Because does there have to be a period of time? Like, in other words, you're now a chairman of the Fed. Do you say to them, look, we got to keep rates here for a while so people understand that an economy can actually function at these level of rates? Or is it just we got to lower them because these kids don't know shit?
If we can get more inventory onto the market in some way, shape, matter, or form, again, loosen up some of the housing market, I think that will deal with it naturally. He thought that the interest rates were high.
By the way, my first interest rate was 10%. And my dad told me how lucky I was to be getting 10%. Anyway, go on.
It's extraordinary. It really is. That people think that, the price of money. I remember, talking about it, even, what you could get, you could retire back in the 1990s, if you had yourself a few million bucks, so you're getting 6% on a 10-year treasury, tax-free for a period of time. There's both sides to this that people fail to understand. And I think it's all this manipulation that's made the market sometimes a little bit, confusing because money's not priced properly.
So I'm going to say a couple things, and then I want you to comment on them, because you mentioned the rapidity at which mortgage rates rose, which put the golden handcuffs on people. People aren't going to get rid of their 2.5% mortgage, so they're going to die in that home. So that's locked up supply. Supply has been affected inversely for 20 years because of government regulation that tax on about $80,000 to any home. So people want to know why they're not building 3-bedroom, 2-bath starter homes for people. There is no money in it. Have we learned any lessons? Is bringing in this new federal, because most of these regulations seem like they're on the state and county level anyway. So I'm not convinced that Trump being a deregulator, although he hasn't really talked much about deregulation in the month that he's been in, can he have an effect and bring down these housing costs?
Again, he's throwing his weight around when it comes to, saying, hey, I'm not going to send, certain types of federal funding to areas. I guess he has that power. But then again, you don't want to overstep to some degree, because again, that's what Biden and Harris wanted to do and say, hey, you gotta have this, Bucala community here on the North Shore of Long Island. And all of a sudden you gotta, put up multifamily units when they don't want them there. So that's problematic. I think, converting a lot of this commercial real estate and allowing that to flip over to residential, I think that would be great. I was laughing today. The Wall Street Journal, the writers that they have now are just that they got to be children. They're saying, Doge is going to ruin the comeback in the commercial real estate market in Washington, D.C. I'm like,
who
what?
gives a shit?
I mean, are you kidding me? I'm like, the market has an intrinsic value, and you think you want to prop it up by keeping the taxpayer paying for all of this worthless real estate? No, I mean, you got to convert some of these things. And I think that's slowly but surely starting to happen. It has to happen. Now, in places like New York City, where you have an old Mad Men style 1950s building that's the size of a city block, you almost got to knock that thing down and start over, because there's not much you can do with that. But these are the things that need to happen so we get more inventory out there.
So we mentioned the fact, because I'm now going to ask you your opinion on residential real estate as an investment, and I know there's vehicles to do it aside from just going out and buying homes. But we agreed that the Fed doesn't know their ass from their elbow. I actually think the Fed wants 2.8 to 3% inflation for the next 2 years. I think they want to inflate away some of the ridiculous debt held by the government, the 5 states, one of which I live in. When you look at that, is residential real estate someplace you think is an excellent investment? Another little caveat to that, we had Jared Dillian on here, and he always talks about the awesome portfolio. He wrote a book about it, which is 20% real estate through ETFs. Are you a fan of that?
It depends on, again, it's certain types of real estate. And again, I've dealt with so many blowups for certain clients that have come in and they've gone into some of these various different real estate investment trusts that had ridiculously high commissions, and they're getting killed on some of these things. If you want to go out and invest by yourself, you did through ETFs, there's just two different things. I don't feel like being a landlord. I just don't have the bloody time to do it. That's not my cup of tea to go out. For other people, they want to go ahead and deal with that. That's fine. Yeah, there's great different vehicles to be getting involved in real estate. And obviously you have to take a look at the market. And again, that's a bit of the problem too, and how that they put together and how they talk about real estate. This is a big country. You can get yourself a 10,000 square foot beautiful home up in Albany, New York, but you're not going to get that in Tampa, Florida, or other places. So again, they talk about the real estate market as across the country. There's pockets here and there where it is affordable, but there's no jobs there. It's these areas, and that's part of the problem too, is there's so many people flocking to these states that have no state income taxes, where it's easier to do business, that have eaten up the inventory, and these states can't even keep up with the infrastructure to deal with all the people.
Chris, I want to clarify what you do before I ask this question. Do you manage money, or do you advise clients? You're an advisor?
We're an advisor. I owned 2 registered investment advisories.
Okay, so based on that, what is your biggest ask from clients right now? Is it longer term? Is it, I don't trust this? How do you approach clients from an equity, a bond, a commodity stance? And I know it depends, so you can go through any angle of it you'd like.
The way when it's actually worked great for us for doing this for 30 years is that, my business derives from my, the shows that I do and the appearances that I make. And then they understand our mentality that we're here to make money slowly. Everything in life that has meaning, value, and worth involves work, time, and effort. And we're owning high quality companies. I do believe, I don't try to time markets or try to guess, and big believer in dollar cost averaging. Everybody's portfolio is unique and different. It's old school. It's not exciting, but I always tell people, I said, you want money managers that bore you. Okay, those are the ones that actually can do a good job.
So do you think get rich quick is the biggest problem for the youth?
Here we go.
Yeah, just for the record,
it's a bloody gambling app, for crying out loud. It's just absolutely insane.
I have a nephew who's actually cut from the same cloth as, I'm going to say, us. And he called me up the other day. He's like, I'm out of college. I just started working, and, I don't want to be stupid. My company doesn't match. So I'm taking their 401k, but what's the next step? Because I want to put money away. He said, my goal is to have more money than you when I'm your age. And compliment to me, Jimmy, that you would never give me, is he says, I realize being around you most of my life that 58 isn't old. See how young I fucking look? You can't even
damn straight.
So he said, so I just kind of want to do this slowly. And we had a conversation, and, it was just kind of a man-to-man kind of a conversation. And at the end, he goes, what about crypto? Do you get that question as an advisor?
Absolutely.
How do you handle it?
The same thing that you mentioned when it comes to, if I, spec home and real estate, spec tech, whatever it may be. As soon as you hear the word spec, I try to tell people, okay, can you afford to lose it? Yeah, I don't gamble. I'm not one that, I don't like casinos. It's not my thing. I don't gamble on sports or anything like that. But my aunt, God rest her soul, used to love going to the casino, but she wasn't an idiot. It was her entertainment money. She went there with her couple $100, and if she came out and made some money gambling, great. She lost her $200. She lost her $200. I speculate, but I don't even think twice about it. If it works, great. If it doesn't, no skin off my back. That's what people fail to understand. I said, there's a time and place for speculation. And, if you're loading up your portfolio on spec, you're going to end up killing yourself. Not a matter of if, just a matter of when. Then you do turn the markets into a casino with no free beer or buffets or any of that other stuff.
By the way, his name is Christopher, and I think he watches this show. And the one thing I told him is you have to look at crypto. And you guys can tell me if I'm an idiot for saying this. Crypto Bitcoin specifically is either going to 1 million or zero. It doesn't have any other option.
Yeah. Right.
Well,
And
it's Alan
you go,
talks
Chris.
about that. You're just talking about you can't let risk lead to ruin. It just, you do that. People do that stuff all the time. And again, a lot of these kids, they don't even remember Stewart from Ameritrade and, money coming out the wazoo. How do you guys remember the big E-Trade casino that was in Midtown Manhattan back in the 1990s? It was the same thing. It was just a different format. And, rinse and repeat. Let's do the same dumb thing again.
So here's my question to you about crypto, though, too, because what Bobby said about going to 1 million or zero, 100% agree. I spoke at a Bitcoin conference last summer, and when I got up on stage, I said to all these people, there's 5,000 people in the audience, not to see me. RFK was speaking next to me at the next thing. But anyway, so I said, I don't even know what the hell you people are talking about. I am about 5% convinced that you guys are right and that Bitcoin solves all these problems you do. The reason I'm here and the reason I'm a Bitcoin investor, and I'll tell you why I fundamentally have gotten in, but if you are right, I don't want to be on the sidelines. It's too big a risk. So then my question to you, Chris, would be, let's say a guy comes into you, he's 50 years old, he's got a net investable of $1.5 million, let's say, doing okay for a 50-year-old. And he says, I am worried about crypto going to the moon and me not being involved. What would you advise?
Again, a couple different variables that you gave me. There'd be a few more questions. I'll, give a roundabout, percentage that he wants to be in and whatever he felt comfortable with. But again, I would say to him, first and foremost, what are you comfortable losing as far as it all together? Like I said, it could go to the moon, but what are you comfortable losing and not having to, worry about it and moving forward and handle it that way? Some of the best investments I've ever made are the investments I didn't make, avoiding a lot of pitfalls. And like, I'm big with that. I like to look at new things too. But again, you don't let risk lead to ruin. You waited a little bit. I mean, in 1990s, you had Amazon, you had CD Now, you had pets.com. They all essentially did the same thing. They stole stuff online. One figured it out. And, that's how you kind of have to look at things. And sometimes it might be better to be a little bit later in and a little bit more sure than in right away. And again, you got to be ready to, I don't want to get the phone call saying, if the thing's, up by this amount or down by this amount. No, you bought it for a reason. We're going to hold it for this long. The amount that I have in my portfolio, I mean, people, oh my God, now it's down below. I'm not even thinking twice about it. Okay. The purpose for it was to speculate, and I'll look at it, maybe 5 years from now, see what happens.
So just to follow up on that too, my purpose here, I've been buying it like every week, a small amount for the last 8 years. Every Wednesday I have just a timed purchase into Bitcoin and Ethereum and some Solana. It's grown into, like amount that I worry about. But this whole time I have to keep reminding myself this is a hedge against some sort of dollar disaster. If I lose it all, that's almost good in some ways, because it means that Bitcoin, the dollar isn't such a wounded duck that it needs these alternatives to back it up. So I'm fine with that. Maybe that's a way to pitch it to people. Thoughts?
See, I don't necessarily believe it's a hedge against, because I'm not a big believer in a dollar disaster, because something's got to replace. If you think that that's going to actually replace it globally,
definitely not. I'm not one of those crazies. I think
the rest of the globe is a disaster. It's a disaster. There's something. Europe is just they can't even get out of their own way.
Well, here's what I stole from somebody, and I'm pretending it's my own. Europe is a museum. Japan is an old folks home. China is a prison. Where do you want to invest? Since I can't remember who said it, I'm pretending that I say it, but you can take that as well if you want.
Plus, what I'm seeing right now, and again, people aren't figuring it out yet, because Trump's a transactional guy, and he knows that Europe's a museum, and he knows who his buddies are going to be there, and he sees, well, gee whiz, they got a lot of stuff going on in Ukraine and Russia, and they got a lot of natural resources, and there's going to be a deal that's going to be had with that. He paradigm shifts things the same way that he came out and he said, yeah, we'll just take over Gaza. Basically, he said what's working isn't working, so here you go. You come up with something better and see what you come up with, which I think is kind of genius, because again, he's right. You do the same thing again and again and again, and it's a mess. Europe, well, let's shut down all of our nuclear power plants. We're a manufacturing economy. We have the most expensive prices of energy in Germany, and, they still can't get out of their own way. They still can't figure it out.
Oftentimes people don't realize the economic leverage the U.S. has. We only think about the military leverage. Well, not us, but other people. You look at Germany, they just had their 6th consecutive quarter of negative growth. Germany's deep in a recession, and that's the economic engine of the EU. So, Chris, you saying that it's a mess over there, it's a fucking mess. But for me, Bitcoin, and I'm done with the subject unless you guys are, over the last 30 days, the correlation between Bitcoin and the NASDAQ is somewhere between 0.7 and 0.8. positive correlation.
Strengthened, right?
70,
Yes.
it's strengthened over the last. When it first came out, people were talking about being, it's going to replace gold. That's when it had a 0.2 to 0.3, still positive correlation. It needs to have a non-correlation, which would be somewhere between 0 and 0.1. 0.7, 0.8, it's going in the same direction as the NASDAQ repeatedly. There's no way you could tell me it's a safety asset if the NASDAQ collapses and so does Bitcoin. It just doesn't fit that.
Well, yeah, I never believed that it's the next gold. It's, the big, no, when people, I even didn't like when they were calling it currency. I'm like, you can't have a currency that moves this much. You can't do business in a currency like that because, if you sold cars and you sold them in Bitcoin and then the thing dropped by whatever amount, you're in deep trouble very quickly. You can't run a business that way. It's not that.
So speaking of gold, Jim and I have been accused of being gold bugs, and we're not. We just both have liked gold for about 2 years now, give or take, depending on which one of us you're talking about. And from that perspective, we're seeing quite a bit of pressure on gold at these new all-time highs, which we've seen before. Two things. As an advisor, have you recommended gold over the long term for clients over, say, you've been doing this 30 years, let's just say the last 10. And where are you at with it now?
Yes, but with the caveat there, also with other commodities as well, uranium or various different things that are out there, rare earth minerals from time to time, because sometimes they get overinflated and come back down. But, I'm a kind of a basket of commodity type of thing. I appreciate gold and its lasting power, but in the same way, I don't get it like other commodities because the other commodities are more useful. That's how I always look at it. I'm always looking at something, what can it do? What can it be used for? And that's just how my brain works. So yeah, it comes as a part of our portfolio, but with a basket of others as well.
So we've talked about commodities a couple times here. So Bobby and I both, maybe starting 6 months ago or so, we thought inflation was going to be persistent. We thought the Fed was not going to fight inflation. And that's a scenario that does, people like gold's an inflation hedge. No, Bobby always says this, and I give him credit for it. Gold is an inflation hedge if there's inflation and you don't think the Fed is going to aggressively fight it, which is where we are right now. But that can also permeate to other commodities as well. So I kind of switched some of my focus away from big tech towards more commodities over the last 6-8 months or so. And the trade's worked pretty well so far. Are you of that same mindset?
I don't move really much in regards to various different positions in people's portfolios based upon these things. I really don't adjust that much. If I feel that there's a certain percentage that a client should have, we're going to stay with that because for me, I don't like guessing wrong in and out of various different things. I like to, predict trends. I like to talk about some of these things too, but like I said, who knows what the idiots at the Fed will do next week or whatever pressure is brought to bear, and then they can throw a monkey wrench into anything. If I like, these commodities and I think that they're going to be great for the next 5, 10, then I'll be in it. I'm not going to think twice about what the short term is telling.
Sure. And you mentioned uranium, which is something that we've been very interested in this show. We've had several people talk about it. I am in on the uranium trade, and it's been just okay. But the fundamentals seem to back it up quite a bit. I mean, there's a lot of things that require a lot of electricity, whether it be AI, whether it be quantum computing, crypto mining. So you mentioned that first. Am I to believe from that that's one that you're thinking about a lot?
Oh, yeah. I think it's without a doubt. I see, it solves a myriad of problems all around the globe, for crying out loud.
Hell yeah.
And, some of these new technologies that they've got coming out are unbelievable. And again, it boggles my mind that we haven't continued to move more in that route. We got our entire Navy runs on it, for crying out loud. Submarines, ships, everything. That we should be having modular reactors put up everywhere. And hopefully if we can, get some push in regards to deregulation, I think this would be great for this country, great for the planet as a whole. So again, cheap energy is key, and it will build wealth and it will lift people out of poverty. And I think that that's something that we need to continue to push on.
One more comment on that before Bobby takes the next question too. 50 years ago, 70 years ago, we discovered a new and relatively clean and source of energy. Right now, the crazy zealots on the left who are fighting for whatever their climate thing is, they don't want the problem solved. They want to define themselves by being the crazy climate zealots. So I think they're going to push against nuclear, even though they are coming to the realization that of course it's the answer. Yeah. It's been the answer for 20 years once the safety measures caught up with the technology. This is asinine, but I think they're like, oh shit, then I won't have a job anymore. I won't be able to, glue my hand to paintings.
No more hey, hey, ho, ho songs out there on the streets. They're going to have to.
They're out of work, Bobby.
All right, so Chris, I've been waiting for somebody like you to be on the show because I want you to explain something to people. I am, by the way, an active trader. My average hold time, I mentioned on the show before, is about 26 days. Obviously, I have other investments that are managed on a month-to-month, quarter-to-quarter basis by somebody else. But when I trade, my average hold time is 26 days. I trade with targets. If something gets to my target, I exit it, regardless of where it goes after that. But you guys, advisors, recommend rebalancing. So I want to ask two things. Number one, do you do it? Number two, at what frequency? And can you explain to people what rebalancing is?
Rebalancing, I kind of explain it to people whenever they're first trying to learn how we go about doing things. It's kind of like Mr. Miyagi in Karate Kid with his bonsai tree, and he's explaining to Daniel's son. He said, "Picture a tree." And then, you got to try to create your wealth, and you want to build your portfolio, and you got to cut here and you got to snip there. Gardening, a lot of different metaphors I can come up with to compare it. And again, because I'm not a fund manager, every client is unique and different. I run this firm with my brothers. It's obviously very work intensive, but much like you have rules in regards to your trading, we have certain rules for certain clients based upon the risk tolerance, where they are, how old they are, where they are, and all of these things matter. But you never go poor taking profits off the table on the way up. And if I own NVIDIA for X amount of years, I'll be selling it along the way. Not selling the entire position because I still like the company, but taking profits along the way and not think twice about it. It's just how you go about doing things. Rebalance other areas not doing well, reallocate assets. And like I said, it's not very exciting stuff. My job is to, obviously, deal with risk and not let risk lead to ruin.
So the successful traders that I know say very similar things. I mean, a lot of them talk about riding winners, but they always do either they trail their stop behind, or they carve little bits and pieces off of the position to lock in a certain amount of gains. That's essentially what you do, but you do it in a natural way, right?
Yeah.
You'd say, look, it's the end of the quarter. We're now too heavy in this as per the original plan. Is that more what it looks like?
Yeah, exactly. I mean, it doesn't even have to be the end of the quarter. It could be, we have the
year.
software put in place that will let me know that, okay, this is getting a little bit big here or there, and we'll know right away and how to go about handling all of that depending on the clients. And
So it's sort of more based on the individual client rather than doing it this client.
Like I said, on my show, I've never given a recommendation ever on my show. 25 years I've had it since 2000, simply because a buy for you may not be a buy for this guy down the street or whatever it may be. And I always find that problematic, because people like watching, programs, oh, buy this, sell this. I said, no, you don't know what, you got to think about your situation, your time frames, and various different things. I got a lot of young people here. Oh, I got $100,000. I mean, question like this. I want to buy a house next year. What should I invest in this year? I was like, what? You don't do style a year. I said, you need the money next year. I said, my kids, I got 3 kids in college right now. Yeah, I invested that money prior to that, but now it's in cash and cash equivalents because I got to pay the bursar's office, for crying out loud. I mean, it's just things that people sometimes overlook.
Well, but to get back what you just said, it's a year, and I agree with you 100% on that. But if he was saying it was 5 years away that a kid was going to college, now we're talking, okay, invest in this normal style.
Yes.
Okay, that's what you're saying too. And you said you rebalance. And by the way, I've been hammering home the rebalancing notion for years and years. And in December of this year, because we've had 2 astronomical years in a row, my investment money, I was on several different shows saying, I sold like 25% of my stocks. By the way, the one thing I was going to say is that, do you advise people to load up as much as they can in the tax-deferred accounts like 401ks and Roths, because then you can make these balancing decisions without incurring any tax implications. Yeah. So when you see that as someone comes to you and they're like, I got $2 million in my 401ks, you're like, jackpot. It's going to be much easier to manage your money because we don't have to worry about the tax portion of it. Yes? Yeah. Do you think that way?
Oh, yeah, absolutely. Without a doubt. Again, a lot of our accounts are in, tax deferred type vehicles like that. And again, everyone, like I said, everyone's situation is a little bit different. And then, client gets mad at me because he's paying too much in taxes. I'm going to be looking at him like, you got to be kidding me.
He's making money, dude.
No, don't get mad at me for that.
So, Chris, what's the current president doing right, and what would you like to see him focus on? I personally don't think he's doing anything really wrong yet. There's some things I think are funny, like the paper straws thing. Well, I'm not sure if I would have held up the frickin' executive order for that, but what's he doing right so far, and what would you like to see him focus on going forward?
Well, there's a method. There's a great method to his madness, and yeah, I discussed this a couple weeks ago. Is that he's basically blowing up how the media handles news. The media, they work together and they craft a narrative, and they there to sell to the general public. And I remember this going back to the '90s when they had that it was a message board called Journalist, where all of the journalists would get on it and they would basically say, this is how we're going to cover a story. I remember Limbaugh on his program used to make fun of how all the media all of a sudden started speaking Latin, where gravitas, when they appointed Dick Cheney to be George Bush's vice president. He's got gravitas. Every network was saying the same damn thing. Right now, because it's such a fire hose of news and information coming out, they don't know what to do, because they don't know how to push it this way or that way, which is allowing him to get a lot done. I think anything when it comes to cutting wasteful spending is something that not long overdue. It's just been, it's that ridiculous. We're watching this stuff right now, and as a taxpayer, and I'm sure your listeners are follows the same thing, you're disgusted. I mean, you see the type of waste that's going on. People have been seeing for how long? How in the world are these people making $150,000 a year and all of a sudden they're worth $30 million? If I did that for my clients, the SEC would be at my freaking door tomorrow, for crying out loud. They're just, how did you do that? It's not possible. And getting this out, I think is great. And, that's where I really think you're going to get interest rates down. I mean, for every, 500 billion, what do we got, about 50 bips right there? You balance the budget. You want to lower interest rates? Fine, great. Balance the budget. Get rid of the deficit, and you're going to get 200 basis points to the downside.
Yeah.
So, what do you guys think? James Fishback from Iuorio Capital. He's
I was going to go on that too.
Friend of the show. I just had dinner with him 2 weeks ago at the Ritz-Carlton here in Naples. He bought, which was nice. James came up with the Doge dividend, right? And he took a lot of heat. He's been on a lot of shows about it. And I think he's purported himself really well. I mean, he's defended the notion of it. I think not that they stump him. You can't really stump James. He's a debate champion. When they call him out for this not being the most fiscally conservative thing, he says, I basically think, and I'm paraphrasing, we have to bend the knee to the American taxpayer for one quick payment. Just say, look, you guys have been defrauded. You guys have been overcharged. Here's your 20% of what we've saved. The rest is going to the deficit. Where do you guys come out on that? I'm asking both of you, or whoever wants to start.
Chris, you start, because I have a lot of opinions on it.
Yeah. Politically, I think it's brilliant. I mean, as far as politics are concerned, and we can go back to the first George Bush checks that were sent out when he first came in. And then you had the stupid checks that they sent out right during the financial crisis as well. It was another check at that point in time. Think this idea that's free checks here. At least they're saying it's coming from somewhere, and I understand politics behind it. I pay taxes. I'm disgusted by how my money is being used. Again, if they want to come back and they want to balance the budget, put in a balanced budget amendment, I'd be happy to pay more as long as I knew it was paying down the debt, because I look at this as, a solid for the future for my kids and the strength of this country. $36 trillion, people can't even get their arms around that. And quite frankly, you don't be afraid of Al-Qaeda, Iran, China, Russia. Stupid. That's what you need to be afraid of. That's what really is hampering this country and holding us back. And what we're actually capable of doing here. We've got everything in the world going for us, except we've been, pissing it down the drain with all the nonsense that these politicians have been doing for a period of time. So I'm still trying to get my arms around it. I understand the politics behind it. Would I rather say, hey, you know what, maybe take a chunk of it? But I even like to want to take it and shore up Social Security and come up with some sort of way where you can, but again, you got to get the government out of, proxies and all of that stuff. They're not allowed to vote on anything, but just put it into a bloody S&P 500 fund and have it help shore up Social Security. Something, I don't know, but that would shore that up, but I'm not sure on that yet.
So here's what I think, Bobby, is that one, politically it was wonderful, like Chris said. It sounds great to people, but it reminds the people, the American taxpayers, that it's their money. And I think the more you can say that out loud, the better it is. I think if we did this in the next year, I think it would be inflationary. We're talking about 3 consecutive CPI prints, 2.5, 2.9, 3%. Inflation is running uncomfortably hot already. This would be the wrong time to throw $5,000 into every tax, which is 79 million Americans checking account. However, after a year, provided that inflation gets more in line and we actually are reducing deficits, I think reducing that $36 trillion debt, I don't even know if I want that necessarily. And before you guys throw barbs at me, because remember, if we are the world's reserve currency, there has to be a decent supply of debt instruments around the world for people to trade and invest their money in and to keep as a neutral asset. But if we can cut deficits down considerably from here, we'll be in a much, much better fiscal situation. But when we can do that and have the deficits to GDP, what are we running at now? About 7-8%, which is ridiculous.
Yeah, 8%.
Yeah, if you get that down to 2 or 3%, then I love the idea of starting talking about giving people reimbursements. Does any of that make sense?
I got an idea. What if we?
By the way, ideas are born on this show. The president will get this idea. Go. It better be a good one.
What if we had it automatically deposited into a retirement account, like a 401k? And if you didn't have one, you'd have to open one up, an IRA, and would automatically get deposited. If you were a senior citizen, you could donate to your grandkids or whatever it may be and have it go into a tax-deferred retirement account.
I think that's a fabulous idea.
Yeah.
I still think if it was done in the next 6 months, it could still have an inflationary component to it, because wealth effect is real. If people say, oh, I got money here, I can spend money there. But I do think that's a beautiful and brilliant idea. I don't want the government to be running any 401ks. I don't want anyone from the government sitting on any boards, because the government is controlling that money at all. But if it's individuals investing in their 401ks, then I like your idea a lot.
Choice, 1K, or maybe people got credit card debt. They could use it to apply to their credit card debt.
Okay. Bobby?
Yeah, I think the only way that it's not inflationary is what Chris just brought up, directly into a tax-deferred investment account, because I agree with you. First of all, the wealth effect would tickle. The second that got announced, the stock market would rise. I mean, we already have a natural bid in the stock market from retirement accounts and long-only mutual funds. All else equal, stocks go up. You know, I've had people that I've been trying to teach them about trading and investing and things like that over the years. And they're like, doesn't the stock market go up? Well, technically, no. They say, doesn't it always go up? Technically, no. But yeah, you're kind of right, because all else equal, it goes up with all those sort of passive buyers that you get from the funds and retirement accounts. But it'd be interesting to see it pay down personal debt. But I do think that's also inflationary, because I think one of the things
inflationary right now. It might not be inflationary in 2026.
One of the things that's going to, we talk about the credit card debt, and we're starting to see people pay for, statistically, I'm not making this up, we're starting to see people pay for staples with credit cards. And that is always a bad sign to me, to Chris's point. It's not just that credit card debt is going up. It's what people are spending on with their credit cards. That's extremely, extremely troubling to me. We had Ed Dowd on a couple of weeks ago, and he thinks we're headed for a recession. Without a doubt, we're almost there already. So I worry about that. But that retirement account, that's an interesting question. We've had a lot of these kinds of things, Chris, on our show. Steph Pomboy, who's actually going to be on our live show tomorrow, she came up with the idea of U.S. Treasuries, federal U.S. Treasuries, being tax exempt for a while to create demand domestically. That was a great idea. And she was trying to get that to Trump, and I think it got there. So that's an interesting thing. I don't know about the mechanism of it, but I think that's an interesting thing.
Another thing I think that I heard that they were thinking about is actually trying to almost do a refinance. I mean, when we had interest rates at those ultra low levels, I'm like yelling as such a freaking moron. And we keep rolling over debt again and again and again. You got rates at this low. Why not just
term it out?
Put it out 30 years, man. What are you crazy?
Term it out, baby. Yeah.
I'm like, any moron would refinance their debt at this point in time. Why are we not doing this? It's stupid.
Trump said that multiple times in his first term also. He's like, why don't we just refinance it all at the low rates we're at right now?
It's so funny, because she looked at that money, that $2.4 trillion in the reverse repo facility, and said to herself, oh, I got all the money I need right here. It's going to last for, my term is 3 years. It's going to last for 3 more years. And guess what? It's set to run out in April right now.
Out empty.
So to me, I always think that when I look at some of the things that have happened with the duration they've chosen for their bond issuance, I think it's almost like salt in the fields for to not let the people live after they leave. I think it's nefarious. Do you have any thoughts on that, Chris?
Yeah, they don't have any skin in the game, and
exactly.
It's all they do whatever they want at that point in time, and what do they have to worry about? I mean, they go on the speaker circuit, they're getting paid. We see all the work at some NGO, and the old George Carlin bit. It's a big club. And we ain't in it.
We ain't in it. I think one of the most shameful things I ever heard from Janet Yellen was when she was doing that testimony before Congress, and basically some Republican, I don't remember, it was a senator or a representative, said, so the Fed decides who gets saved by Treasury. She said, yes, we decide. She goes, no, not the Fed. We decide. The Treasury decides. And I'm like, who the do you think you are?
You remember what she also said with that, Bobby, too? She said, if you are a systemically important bank, which means basically like 50 banks.
Yes, Silicon Valley magically had that one work too.
Yeah.
Well, yeah,
Imagine
that was a little more corrupt than the average one.
Oprah had
And she
money
said,
in that bank.
and the guy said to her, then what about some regional bank in Oklahoma? And she basically said, they're shit out of luck.
Yeah, they're
I'm
not
like,
important.
Jesus Christ. There used to be 15,000 banks. Now there's 4,000. I think they'd be happy with 30 banks. Anyway, there's my diatribe.
Absolutely. It's less, you don't have to take as many people out, to dinner in Georgetown to get the checks going back and forth, guys.
Yep.
How many banks should we lose, after the Great Recession, the stupid Dodd-Frank, because they could just no longer afford to be in business because of the regulations. In my industry as an RIA, I go back and take a look at my costs that I used to have 30 years ago to run my business compared to now. You're pricing everybody out because of all of these regulations. And it's a shame that there's not more, community banks and banks in all of these places. And it's all because of the rules and regulations.
And a good friend of ours wrote a book called The War on Small Business, Carol Roth. I'm sure you're probably familiar with her. It's a fabulous book, and it really illustrates and really underscores the point is that the government wants to control things. You can't control, it's much easier to control 5 chain restaurants than it is to control 1,000, mom and pop owned. So I really do believe, whether they know it or not at the federal level, they are trying to consolidate all this shit. Tinfoil hat wearing conspiracy this. I will tell you that I'm 37-0 with my conspiracy theories. But anyway.
That's the way they've been doing it in Europe, the same exact way, because then you force them, you got to have certain capital requirements. What are your capital requirements? Buying the government's debt. Okay, thank you. So it's you have to you're creating, like I said, this customer. I call it my watchdog on Wall Street, axis of evil. Big business, politicians, and the media. They're working hand in hand. Again, that's the big club.
By the way, I want to recommend to everybody listening right now that you read Alexei Navalny's Patriot. I'm about halfway through it. Basically, Alexei Navalny, for anyone who doesn't know, is the opposition leader in Russia that was poisoned once by Putin and then poisoned successfully later by Putin. So he had more than one attempt on his life, I'm sure, but one of them finally succeeded. So this is the memoir he was writing while this was all going on. And I started dog-earing all the pages where Navalny complains about something in Putin's Russia that sounded like Biden's America. And I'm not I've never gone online and been hypercritical of the administration at that particular time, because for me, it was okay, what do I really know about what's going on? I know what I see and I can comment on it. But reading this book, man, one of these days, Jim, I'm going to bring the book out and go, okay, I'm going to read this to you. Do one of those things like when those radio interviews go on the street and they go, so Biden did this. What do you think of it? Oh, that's great. Well, actually, Trump did it. What do you think of it now? Those videos are hysterical. Anyway, Chris, what is sort of a level? You obviously get people who come in and they say, I want to be aggressive. And you go, man, maybe that's not the best idea for you. Or people who say, I want to be, really, really conservative. I don't know if you ever would say that may not be the best approach for you based on your goals. What's kind of the framework for that sort of an approach? Who can be aggressive? Who can't? I know that's a long question, but we have time.
It's so many different factors. Obviously, time period is obviously age, where you're at, what you're planning on moving forward. I don't even like to call what we do even financial planning. I like to call it financial preparation. It was the old saying, you want to make God laugh, tell him your plans. You don't know what's going to be, you're going to encounter 5 years, 10 years from now. I think the nonsense where, you sign up for a 401k plan, you're sitting in that meeting and they're like, you're going to want to, when are you going to want to retire? And they ask you that question to a 21-year-old. I say, you don't want to live your life like that. You want to be warehousing assets. You want to be building up wealth over time so you can take advantage of the opportunities that, life is going to provide for you. God is going to give you throughout your life. And, you again, try to avoid all shortcuts, and I'll see some younger person say, I'm young, I can afford to be really aggressive. I'm like, why would you do that in your 401k? You're going to be rich anyway if you just do the right thing over this period of time. Why would you risk it? Makes no sense whatsoever. Is that, that mentality? Oh yeah, I can afford to do this. No. You got to be prudent because, the time work its magic, and compounding, you're going to kill it. So a lot of different things. But again, I try to, our approach is a little bit different than the salesy type approach. It's more about a building a generational wealth type of an idea where, someone comes to you and you want to speculate on a small business. You have the ability to go ahead and do that. You know what? You only live one life. You want to, buy that home somewhere on vacation home, go ahead and do that and not hamper that. Not look to, also let your investments actually rule you as well.
So this is a question I actually have. Where do you stand on whole versus term life insurance for people? Do you have a stance at all?
We mostly term, and term is something that you use until you don't have to use it anymore. Yeah, it's just, when I was obviously, years ago, my kids were at a different stage in college, all this stuff. Obviously, I needed more term to provide for my wife and my kids when they were younger. If they went to college, you can change this over time. In term, you can use as strategies too with businesses, with, to buy out your partners into various different things. That's another thing we're, dealing with right now is a lot of families with small businesses and whether or not the kids want to take over. Because again, sometimes it's a difficult conversation to have because certain they want their kids to do it, but I'm like, kids are not you, and most businesses are going to fail in the second generation, and even more in the third generation. You want to rethink these things. So again, I use it as a tool and a bit of a hedge as far as a life hedge for people.
I don't have any more questions, Bobby. You have any more?
Yeah, I got one more. When people come to you and say, what is the one thing that they should do right out of college? Is the answer just blanket invest? Or do you have like more of a, well, that's a complicated question approach as an advisor? Because if it's me, I just say, find the person you trust and go from there.
That, but again, you know what I get a lot of? And this is not just right out of college, but young professionals that are doing well, even young families that are doing well, come into my office, nice looking family, boat, car, house, and also $70,000 in credit card debt. What the hell can I do for you? Okay. Do you think that I am going to show you a higher rate of return than you're paying on your credit cards? That is a major issue, is that people are keeping up with the Joneses is going on steroids because of social media. I tell people, you know what? You want to live a life where you have more money than your neighbors and they don't have a freaking clue. Okay. That's a much better way to go about living. And then more often than not, I tell them what they need to do. You're going to have to sell a car. You're going to have to sell the boat. You're going to have to get rid of all of these things because let me tell you something. I'm not going to show you a 25, 30% return a year. Just ain't happening. Okay. And what's the point until you take care of that? You got to take care of that first and foremost. And a lot of kids in college, they graduate from college, they got a lot of credit card debt. I tell a lot of these kids, get yourself a second job. I know you think you're a big swing, and you know what? You just got to, your first job at this one, work weekends. Do what it takes. Sack away some extra money when you're young, when you can put in all of those extra hours. You're going to save money. You're not going to go out as much. You're still going to enjoy yourself. And that's how you kind of build up. That's how I built my business.
The one thing to add there, let's say it was someone who was very, very close to me and he was having huge financial difficulties. So he came over and he sat down and we went over all his expenditures. And I go, well, first of all, this, the health club you're paying, $240 a month, that's got to go. You got to work out in your basement. He's like, well, no, I love the health club. Look, I think this conversation's over then. So that's you just made my job a lot easier, right?
Dave Ramsey's been on air for how many years with the same show every day?
Yeah, I don't. People still watch it, right?
It's kind of amazing how things actually link up with. By the way, they call them gyms now, but I still call them a health club for some reason. I remember Chicago health clubs when I was back in Chicago. But anyway, you go into a gym and you see so many people ego lifting. And those are the people that are just like, they end up with injuries or they end up quitting because they get burnt out. And then you see this 80-year-old guy who's still doing like bench press with freaking 25-pound dumbbells. He gets up and he walks out like he's 40. It's like if you're going to be sustained for life, whether it's health, whether it's financial, you got to do the correct things in small doses, and you got to know it's going to take time.
Chris, what do you do? What do you do fitness-wise?
Financial planning right there. I tell people financial preparation, you got to take care of yourself. You don't want to be paying these bills later on. I'm real big on lecturing people. I said, listen, you got to get to the gym. You got to exercise. You got to take care of yourself. That's number one on your list.
What do you do, Chris, diet-wise, exercise? How old are you, first off?
I'm 53.
Jeez, okay, what do you do? Yeah, you're a baby. What do you do? Do you try to eat low carb at all? Do you work out a lot?
Carb. I eat a ton of meat, and I'm a active gym goer 6 days a week. I still like to pick up my lacrosse stick, even though I'm chasing my kids at games, around the country, and stay as active as I possibly can.
Do you do ice plunge?
Not so much ice plunge. My brother does that a lot. He keeps trying to convince me to do that. I did jump in a Long Island Sound a year ago when it was freezing cold. It's not a fun thing to do. I'd rather do the sauna thing. I'd rather sit at 185 and do that.
I do the sauna too. I went to, where I'm staying in Marathon, there's a campground just down the block, and I go there every other day and buy like 5-6 bags of ice. And this morning, the lady's real sweet. She's like, do you just have a party over every night over there? I'm like, no. And there's 3 people in her office. I said, no, I fill the bathtub with ice, fill it up, and I soak in there for like 10 minutes. She's like, why in the world would you do that?
10 minutes. That's impressive. That's
well, it depends. If it's like 2/3 ice, I'll only stay in there for like 5 minutes. If it's, depending on the temperature of it, like I know. But then I do, like today, I filled it up, I stayed there for 10 minutes, and then I went for a run afterwards. Man, you want to feel your metabolism flipping into high gear.
Really?
Is when your body's working to run and working to keep itself warm for a 40-minute stretch. And like, there's not enough food in the house to keep me satisfied the rest of the day. It's amazing.
It's crazy. That's why I like bike riding in Florida in the summer. I'll go for a ride on my bicycle in the summer. And people are like, what are you, nuts? I'm like, no, man, I can like eat. And it doesn't matter what there is in the house. I'll lose a pound the next day.
Because, yeah. All right.
What are those on the curtains behind you? Are those turtles?
I don't know. This is a rental. I don't know what it is. It's a cool place, though. I just looked in the canal I'm on. There's like about 30 fish. They're this big. I'm going to go. There's a bait shop over there. I don't know shit about fishing or anything outdoorsy, Chris, but I'm going to go to the bait shop and see if I can just fish for those things. And then I'll watch a YouTube video on how to clean them. That'll work, right?
They'll work out fine.
It'll be great. Chris, tell the people where they can find you.
Oh, it's simple. Just go to our website at watchdogonwallstreet.com and everything's available there, our shows and everything about what we do.
That's awesome. Thank you for joining us.